It's that time of the year. The carts are brimming, so is competition. Quick commerce platforms are pulling out all stops to cash in on festive frenzy as the battleground for elusive consumer wallets shifts to a large extent from supermarket aisles to screen tiles. Just the right time for a detailed catch-up with Vipul Parekh, co-founder of the Tata Group-backed grocery giant BigBasket. One of the co-founders of BigBasket and also overseeing marketing and finance at the platform, Parekh has been a seasoned investor in retail and consumer businesses. Stay tuned for a freewheeling chat on staggering valuations, the need for speed, front-loaded stocks, crashing prices, and ever-expanding categories from salt to iPhones to fashion. At stake is a crucial festive season and heightened competition, not just within the segment, but outside of it as well. It's Monday, September 1st. I'm your host Ratna Bhushan from the Economic Times, and you're listening to the latest episode of our brand new show, Corner Office Conversation. So first off, I asked Vipul something that's on top of everyone's minds. So Vipul, tell me, has BigBasket's IPO timeline been finalized?
No, actually, we don't have a fixed IPO timeline, contrary to popular press. See, the fact is that we are a Tata enterprise now, and have been for the last 4 to 5 years, and rightly so. The need for external capital is low, and you're not going to the capital markets just because you need to raise capital or you need to do some change in your structure. So from a current perspective, it looks like we should be in a position to do an IPO in the next 18 to 24 months. But when we finally do it will essentially depend on when the board decides is a good time.
Right. But do you have any ballpark figure on how much you're planning to raise from the listing?
No, actually, no, not at all. We won't require too much of capital after that. That's our belief. And in our case, remember, since Tatas are not sellers and they are the largest investors on the cap table, there's not too much of offer for sale either.
Right, correct. So tell me, Vipul, profitability or volumes through discounts? What's your core focus now?
See, we are in an industry which is growing very rapidly. When industries grow at the pace at which quick commerce is growing, we've had 100% CAGR for the last 2 years. We'll probably grow at 60 to 70% this year, maybe even faster. And by all reckoning, we should be growing at about 40, 50% CAGR for the next 4 to 5 years. Now, in a situation like that, you have to expect that people will put capex much before times so as to be able to serve customers better, whether it's in terms of more dark stores, more distribution centers. They will also invest in marketing to drive new customer acquisition or trial, or in providing a strong customer proposition and doing more things to test out what is the canvas for this opportunity. So when industries go through this kind of phase where there is a significant growth, you find players invest and it looks like nobody's interested in making money or the economics don't work. But having said that, this business is going to be profitable, and this is going to be one of the largest consumer businesses in the country. And therefore, I longer term or even medium term, I see excellent profitability potential in this business.
But in general, Vipul, the perception is that profitability remains a challenge. Then there are high operating costs, there's intense competition. So how do you deal with all that?
See, profitability is a function of 2-3 things. One, it's a function of scale. This industry is going through growth and people are investing beforehand. So it will take time for that scale to catch up to the investment. And to me, that's about maybe 2 years away. So that is one aspect. Second, there is a significant amount of competition today because everybody is jostling for space. People are figuring out what's going to work. People are competing in very intense manner to gain market share. And there are significant investments happening in customer acquisition. Now, all of that is also contributing to that unprofitability, but I think that will also moderate over a period of time. One of the things that you need to see, and which is already getting demonstrated, is for almost every QC player, the majority of their best performing stores are profitable. And these are not 1 or 2%, these are probably 25, 30, 40%, and probably touching 50% for a lot of them. This is good, early indicator of the fact that the model will work and will be profitable. We fundamentally believe it's probably going to be more profitable than offline retail, because one of the biggest factors in retail profitability in India is real estate costs. which gets moderated when you operate a quick commerce business. And therefore, I think this model is profitable. People are today investing for scale, but that will moderate over a period of time.
Okay, significant points there, Vipul. But tell me, how many cities do you want to expand to, like say 12 months from now? Because expansion seems to be very much the flavor of the season, like we can all see.
We will probably add another about 40 to 50 cities. But having said that, let me give you a little context of how we think about adding new cities. Our current split between our top 10 metro cities, which is the bulk of the quick commerce market today, and the other cities is about 80-20. We don't expect that ratio to change much. In fact, at best, we think even for the industry, over the next 3 to 4 years, the ratio can at best become 70-30. So essentially, the top 10 cities, which are the metros, really are going to continue to account for a large portion of the business. The next 200 towns in India, or next 250 towns in India, are probably ripe for quick commerce. But there are smaller markets, and collectively, they may not amount to more than a third of the, or even less than that, or maybe a quarter of the entire industry revenue over the course of the next 3 to 5 years. Simply put, think of it this way. If you take a small city like Tirupati or a Ludhiana or a Jalandhar or let's say Coimbatore, the number of dark stores it can hold potentially, which will serve the entire market, is about 10-12. A place like Bangalore can hold about 150 for each player. So you could have 500, 600. So the potential is very, very different. And even the tier 1 markets, I don't think the industry has not captured a dominant share. So there's a lot of room for growth.
Okay, that brings me to my next question. There's so much talk about new categories, from phones to bed sheets to jewelry to watches, anything but grocery. So you're talking about quick commerce, but it runs the entire gamut now: beauty, fashion, footwear, ACs, phones. So do these categories bring in profits? And also, are there volumes in these categories?
If you look at the broader e-commerce market, because electronics is actually the largest category, followed by miscellaneous items and followed by food and fashion. Because there is significant volume in categories like mobile phones, tablet, and things like accessories, you will find that a lot of these items which are small, which can be easily delivered on a bike, will gravitate to quick commerce. How much of the overall entire online electronics market will move to quick commerce is open to debate. But I wouldn't be surprised if over the next 3 to 5 years, about close to 20% of the market moves to quick commerce, which means it will be, let's say, 5x the size of what is the current quick commerce revenue. Then there are other categories. The one category which has always been core to grocery has been beauty, and that will continue to be that. What may not move to quick commerce is because quick commerce is focused on velocity, are premium brands or premium makeup or luxury beauty brands, which are unlikely to move to quick commerce because it doesn't make inventory sense for a quick commerce player to offer those kind of categories. So the dominant categories are going to be electronics outside of grocery. The other category which will be large is beauty. The third category which will be large, I think, is going to be 10-minute food. And the fourth, and which is a significantly large category, but which is not necessarily moving from online retail, it's actually moving from offline retail, is what I call event merchandise. And let me give you an example. Things like chappals, locks, pins, small toys, return gifts. And there are a whole host of such items which have moved to quick commerce because this is a natural place. It's something that a customer looks for. It's not easy to find. You don't want to make a trip for a one single item. And this is where quick commerce really delivers on. And therefore, this category, which is all general merchandise, and an associated category, which is event merchandise. For example, you want kites during Sankranti, or you want gold coins during Diwali, or you want any festival fashion during that particular festival. Quick commerce is ideal platform to deliver all of that. And so this event plus general merchandise is also becoming a very, very large category. In fact, it will only be second to electronics in terms of size and potential for quick commerce.
Right. So what's the kind of assortment that you are looking at, grocery versus the others?
So we are focused on one, obviously grocery, which is a dominant category for us. More than half will probably be grocery. And that this includes the core beauty assortment. And then we are focusing on electronics. We work very closely with the Tata Group company, a sister company, which is Chroma. And we are working in close partnership to see how we can leverage their strengths and make sure that we deliver the entire range of electronics across our quick commerce platform. We are also working with 1mg for pharma. We are working on food with Tata Starbucks and Cumin. And we will therefore leverage the Tata ecosystem for a lot of other categories because these companies already have experience, they've built expertise, and they already have the inventory and the knowledge of what sells in the market with them.
Absolutely. So, Vipul, I would like to draw your attention to dark stores now. What are your expansion plans? There has been so much chatter about expansion within metros, smaller cities, then this 10-minute food delivery. So, obviously, it means a lot more dark stores. Can you just take us through your blueprint?
Right, it will. And that's the hope. But more importantly, for us, more than new customers, we are really looking at it as a service to our existing customers. So we have started with Bangalore. We have done almost about 40 dark stores now, and we'll roll it out across Bangalore over the next 1 month or two. And then we will take it online across the country over the next 4 to 6 months. So we are not going to pick up from restaurants and deliver. The food that we deliver is actually the kitchens are sitting inside our dark store. So whether it's Tata Cumin or Starbucks, their cafe or their mini cafe or their kitchen is actually sitting inside the dark store. So it is done there because that's the only way you can deliver in 10 minutes. Otherwise, it is not possible to do that. And also, this gives us tremendous control in terms of what quality we are offering. So we are finding that this is a very interesting category. It is a challenging category because it is operationally intensive. You have to be really very focused on processes to manage the operations, the food operations, and to scale it, it requires time and effort. But customer adoption is strong. Customers love the quality of food, and reorder numbers are very, very good. So we'll continue to build this category out. We are in no hurry. I mean, we are not competing with Swiggy or Zomato. This is not a food delivery business. This is part of our quick commerce business, and we are really just focusing on 10-minute food. And we'll continue to build this out over the next 10 to 12 months. So we will be about 1,000 dark stores plus by the end of March. This is coming March. And in fact, most of the rollout will be done by September. And some of the rollout will happen over the next 2 quarters. Beyond that, we will add dark stores where we think we've run out of capacity and we need more dark stores. For example, sales has grown. We have hit the limit in terms of a capacity that a dark store can handle. And we will then add a new dark store. And this will be true for the tier 1 cities. And in newer cities, if you are entering newer cities where we think there is potential, we'll add dark stores. So dark store, addition post the 1,000 will get graduated on the basis of growth and on the basis of entering into new territories.
Okay, I get that. But this another very pertinent question, which is all over the place. There's been so much increase in checks and audits by government agencies on dark stores. Hygiene lapses have been called out, not for you, but many of your peers, and on food storage and handling. All this at a time when expansion is at breakneck speed. Is it like too many dark stores too soon?
I mean, it could be too many dark stores too soon. I wouldn't know what the issue could be. But fundamentally, at least we've been doing this business for a long time. And I think it's about how you construct your basic processes. One, especially if you're operating a store, that you have a clear planogram. So if you look at our dark store, every SKU has an ID where it will go to. Now, that's very important because you need to know where it is. Because if you don't know where it is, one, you may not pick, or you may put things in different places, and then you have expiry, and then you have leakage, and then your wastage, and all sorts of other things. So the second is design of processes. Whether it's your stock management process, which is the first thing which has gone in, should come out, FIFO. That needs to be followed very strictly. You need to have an expiry management process. You need to know the goods that are sitting on your shelves. What is the expiry? How many of them are going to expire in the next today? How many are going to expire tomorrow? And different products have different expiries. Managing that, knowing what's getting expired becomes very, very important. So it is about basic processes which are supported by tech. So you need to have the tech to do this, because manually for somebody to go and see this on a daily basis and make this happen is not going to happen. And that's very difficult. So therefore, sometimes I think it's a question of just discipline and also capability from a tech perspective to manage this. In our case, we built these three things a long time back because we've been in the business for a long time. So therefore, this part of the business works very, very well.
Okay, I get that, Vipul. But tell me, what are you doing about it to address consumer concerns? Because it's not just, it's not just what you're doing internally, but also a perception that consumers may be having. So how are you addressing that?
I know. So one of the things that we are doing, at least for our customers, is dark stores are open for customers to visit. And one of the things that we have learned over a period of time is that when you start inviting customers, and it is not on a calendar invite so that everybody can clean it up and keep it ready and decked for customers to come in, automatically the dark store gets maintained absolutely beautifully. But the fundamental still goes back to design, building larger dark stores, providing spaces for people to actually, simple things like a recreation room or a place that riders can sit. If you don't take care of fundamental hygiene elements, it is impossible to run a dark store well. And if you do that, and if you make sure that your dark stores are open, and if you make sure that there is no pressure on the team to actually keep expired stock, or they are held accountable for stock, then you don't have any of these problems. So our dark store team is not responsible for inventory. Their job is only to fulfill. Inventory is actually what is decided by the machine, turns up there. Whatever is which can't be sold is automatically flagged by machine, and their job is to pick it up and return it. So therefore, when you create processes which do not impose penalties or impose the wrong penalties on people, then everybody is working towards a common cause and making sure that there is an audit team which actually checks that the processes are working for every dark store. And we have surprise audits, we have surprise check-ins across all the stores, and they don't know when it's actually going to get audited, and we measure those scores. And then we look at saying where is the dark store failing, and where are we finding processes not working well. So if you put this basic mechanism in place, there is no reason why we can't address this problem.
And Vipul, it's been great talking to you. It's been a very holistic conversation. Thank you so much. I really enjoyed it.
Thank you so much. It was a pleasure speaking to you too. Have a good day.
While BigBasket, which started online grocery in 2011, has the Tata Group backing, will that be enough to flex muscle as rivals race to capitalize on instant deliveries to consumer doorsteps? From listed rivals Eternal and Swiggy to Zepto to newer ones like JioMart and Amazon now, they're all ramping up assortments and opening up a lot more dark stores and warehouses to win in an ever-exploding market. A report by Red Seal Strategy Consultants estimated India's overall e-commerce market to grow at least 25% over last festive season, leading to more than 1 lakh crore rupees in gross merchandise value and the strongest in 3 years. The story is just starting to unfold. We're signing off on that note and hope you enjoyed this episode. You've been listening to the latest episode of Corner Office Conversation, and I'm your host, Ratna Bhushan. This episode was produced by Vinay Joshi, sound designer, Indradeel Bhattacharjee. Corner Office Conversation drops every alternate Monday on a listening platform of your choice. Thank you for listening and have a nice day ahead.